I don't say this lightly. Tomorrow was not supposed to arrive this early. XRP just crossed from speculation into something far more dangerous: production capital. And once that line is crossed, the rules of price, time, and patience change permanently. Hello, everything, and welcome back. Hopefully, you're having an amazing day. Hit that thumbs up button if you're enjoying the content. Subscribe if you haven't already, and let's get into it. Because what I'm about to walk you through should not be happening this fast. Historically, this kind of shift takes years, entire market cycles, endless regulatory back and forth. Instead, we're watching it unfold in months, quietly, methodically, and most people still think XRP is just another token waiting on a price pump. Here's the update that changes everything. The XRP ledger is developing a protocol-level lending system. Let that sink in. Not a DeFi app duct-taped on top, not a third-party experiment. This is native on Ledger, governed by validators, fixed term, fixed rate lending, unsecured options, 30 to 180-day durations. And the most important detail that almost nobody is talking about: risk isolation using single asset values. Defaults don't cascade. That isn't crypto logic, that's bank logic. This is what institutional credit looks like when it's engineered properly. It transforms XRP from something you speculate on into something you deploy. Yield changes everything. Once yield exists, price develops a flaw. Flaws change narratives. Narratives attract capital. And capital doesn't wait for validator votes scheduled for January 2026. Markets frontier run inevitability. That's why what we're seeing right now matters so much. While the broader market bleeds, fear spikes and headlines scream chaos. XRP quietly pulled in nearly 63 million in ETF inflows in a single day. Bitcoin was red, Ethereum was red, XRP wasn't. That isn't retail enthusiasm, that's relocation. Smart money doesn't chase green candles, it positions before structural upgrades. And this is exactly where most people get it wrong. They obsess over daily price action while missing the positioning phase entirely. That's why I built the XRP Insiders Elite, for people who want to understand where capital is positioning before it moves. It breaks down real strategies, real signals, and real risk management. So you're not reacting, you're prepared. If you want that edge, it's in the video description. Now let's keep going, because the ETF flows are only part of the story, and honestly, not even the most important part. Yes, roughly $1.3 billion has been locked into XRP investment products in just 2 months. That alone shattered expectations. But the quieter number matters more. $15 billion in payments flowing through Ripple's on-demand liquidity. This isn't theory anymore. Over 300 financial institutions across 55 countries, 40% actively using XRP, not just messaging, actual settlement. In 2024 alone, ODL processed 15 billion in cross-border payments, up 32% year over year. Asia Pacific accounted for 56% of that volume. 70-plus corridor pairs now live, covering roughly 80% of global remittance routes. That's not adoption coming. That's infrastructure already running. In Q1 2025, active XRPL addresses surged to 142%. Daily transactions crossed 2 million. Usage precedes price. Always has, just rarely on the timeline people want. And while all of this is happening, another piece quietly drops that should end the debate altogether. Reports now indicate Ripple is in late-stage talks for a 2026 IPO. You don't go public if your numbers are fragile. You don't invite that level of scrutiny if your business isn't battle-tested. An IPO doesn't just price Ripple. It forces valuation clarity on everything connected to it, including XRP. Institutions care about one thing above all else: models. Once Ripple has a public valuation, analysts can finally model revenue, payment volume, token utility, and balance sheet exposure. Ambiguity suppresses assets. Clarity reprices them. And once those models exist, price compression ends. Then there's RLUSD, Ripple's US dollar stablecoin, quietly expanding multi-chain, Ethereum Layer 2s, Optimism, Base, Arbitrum, Unicane, all connected via wormhole. Native cross-chain movement, not wrapped nonsense. Regulatory approval from the NYDFS is still pending, but the rails are already built. Stablecoins don't expand unless liquidity is needed. Settlement demand doesn't wait for public understanding. RLUSD feeds the flow. The XRP ledger settles it. Zooming out to the market for a moment, not much has changed. Intraday, Bitcoin hovering above 90,000, Ethereum reclaiming 3,000, XRP holding its ground around the $2 region, chilling like a villain. Total market cap back above 3 trillion. Fear and greed still leaning toward fear. And I get it. 2025 hasn't delivered the fireworks everyone expected, but here's what hasn't happened yet. Rotation. Bitcoin dominance hasn't rolled over. When it does, altcoins run. XRP historically moves late, and when it moves, it doesn't ask for permission. If XRP holds this region and avoids a deeper breakdown, a new all-time high in 2026 is absolutely on the table. Stimulus is coming. Tax returns are coming. Liquidity always finds speculative outlets. And when it does, it chases assets that already crossed the line from idea to infrastructure. Because what you're watching right now isn't a chart setup. It's a status change from speculation to productive capital, from narrative to necessity. And once financial systems cross that threshold, price doesn't move gradually. It resets. And with that in mind, let's move straight into the next layer of this shift. Because what's forming beneath the surface makes everything we've covered so far look small by comparison. What makes this moment so difficult for people to process is that it doesn't look dramatic yet. There's no euphoric blow-off top, no screaming green candles, no media frenzy. Instead, it looks boring, technical, bureaucratic. And that's exactly how real system transitions always begin. When financial plumbing changes, it happens quietly under fluorescent lights inside boardrooms and regulatory frameworks, not on Twitter Spaces. This is where XRP lives now. The market is still trying to value XRP as if it's a high beta speculative asset, something that rises or falls purely on sentiment. But the behavior underneath the surface no longer matches that classification. When an asset starts anchoring settlement flows, credit structures, and liquidity routing, volatility doesn't disappear, but its function changes. Price becomes less about excitement and more about capacity. How much value can this network safely carry? How much capital can it intermediate without friction? That's a completely different question than how high can it pump. Take the lending protocol on the XRP ledger and zoom out for a second. Fixed term, fixed rate validator governed lending is not designed for retail Dions chasing yield. It's designed for balance sheets, for treasuries, for entities that need predictability, not excitement. And the decision to isolate risk at the single asset level is critical. That design choice alone tells you who this system is being built for. Banks don't tolerate contagion risk. Regulators don't tolerate cascading failures. This architecture anticipates both. Once lending exists at the protocol level, XRP stops being idle capital. Idle capital is speculative by nature. Deployed capital is productive. Productive capital demands yield, efficiency, and reliability. That's why this shift matters more than any ETF headline. ETFs validate demand. Lending systems validate utility. And utility has a funny way of forcing repricing, whether the market feels ready or not. Now layer that on top of what's already happening in cross-border payments. 15 billion in annualized flow isn't a proof of concept, it's scale. At that level, inefficiencies become expensive very quickly. Every basis point matters. Settlement speed matters. Liquidity depth matters. XRP's role here isn't philosophical, it's mechanical. It reduces trapped capital, it reduces pre-funding requirements, it compresses settlement time from days to seconds. Those aren't crypto benefits, those are balance sheet improvements. This is why you're seeing institutions quietly reallocate during periods of fear. Fear is when long-term players build positions. They're not guessing which token will trend next week. They're assessing which networks will still be relevant when capital markets normalize around digital rails. XRP keeps showing up in those calculations, not because it's exciting, but because it works within the constraints institutions actually operate under. Regulation is one of those constraints, and this is another area where the narrative is lagging reality. For years, XRP was framed as held back by regulation. In truth, it was being shaped by it. The same clarity that felt slow and frustrating to retail investors is exactly what institutions needed before committing real volume. Markets don't reward uncertainty at scale, they punish it. Now look at where we are. ETFs leave, ODL volume accelerating, a native lending layer in development, a stable coin expanding cross-chain with regulatory approval pending not hoped for. And on top of all that, credible IPO discussions. An IPO is a forcing function. It collapses ambiguity. Once Ripple is publicly valued, the market can no longer pretend it doesn't know how to assess the ecosystem around it. Revenues get disclosed, costs get modeled, growth trajectories get compared. Suddenly, XRP is no longer floating in narrative space. It's tethered to measurable economic activity. That doesn't mean XRP becomes a stock, it means the fog lifts. And when fog lifts, repricing doesn't happen politely. This is also why comparing XRP's trajectory to prior crypto cycles misses the point. In previous cycles, infrastructure followed price. Projects raised capital after speculation drove valuations higher. This time, infrastructure is arriving first. Usage is expanding first. Capital markets are integrating first. Price is lagging the fundamentals, not the other way around. That inversion is uncomfortable for people who are used to fast gratification. But it's exactly what you'd expect if digital assets are maturing into financial infrastructure rather than casino chips. Zooming back to RUSD for a moment, the multi-chain expansion is another signal most people are misreading. This isn't about competing with other stablecoins for retail usage, it's about liquidity orchestration. Stablecoins are the grease that allows value to move efficiently across systems. By positioning RLUSD across major layer 2s while settling through the XRP ledger, Ripple is effectively building a liquidity mesh. Value enters where it's needed, it settles where it's cheapest and fastest. That's not accidental design, that's systems thinking. And systems thinking is what separates platforms that survive from those that spike and fade. Markets eventually reward architectures that reduce friction across multiple layers. Payments, credit, settlement, compliance. XRP keeps checking those boxes even when the price chart looks unimpressive. Which brings us back to the broader market psychology. Bitcoin dominance hasn't rolled over yet. That matters. Historically, meaningful altcoin runs don't begin until Bitcoin finishes its move, and capital looks for higher beta elsewhere. XRP has often been a late mover in those rotations, frustrating holders right up until the moment it isn't. But here's the difference this time. Even without a full rotation, XRP is attracting capital, not euphoric capital, strategic capital, the kind that doesn't leave at the first sign of volatility because it's tied to longer-term thesis. That's why holding key structural levels matters more than chasing short-term upside. If XRP can continue to hold its range while fundamentals compound underneath, pressure builds, compression builds, and eventually that pressure releases, not because of hype, but because the market runs out of excuses to keep pricing it like a question mark. None of this guarantees a straight lineup. Markets never work that way, but it does change the probability distribution. Downside becomes harder to justify structurally. Upside becomes easier to model. And when enough participants reach that conclusion independently, price moves faster than anyone expects. This is how transitions actually happen. Not with fireworks at the beginning, but with quiet switches flipping behind the scenes. Lending rails go live. Payment volume scales. Regulatory clarity hardens. Valuations become visible. And then, almost suddenly, the market realizes it's been looking at the wrong thing the entire time. Because by the time consensus forms, the repricing is already underway. And with that context firmly in place, the next piece to examine is how capital behavior changes after an asset is no longer treated as speculative, and why that phase is where the most violent moves tend to occur. This is not financial advice. Here's the part most people never think through because it only becomes obvious after it happens. Once an asset crosses from speculative to productive, capital doesn't just flow in, it behaves differently. Time horizons stretch, volatility compresses before it expands. Weak hands disappear, not through panic, but through boredom. And then, when price finally moves, it does so in a way that feels disconnected from the charts people were staring at for months. This is where XRP is heading now. Speculative assets are valued on belief. Productive assets are valued on throughput. How much value can they intermediate? How efficiently can they do it? How reliably can they operate under stress? Once those questions replace what's the next catalyst, you're no longer dealing with a hype cycle. You're dealing with capital allocation. That's why the market behavior around XRP feels so strange right now. There's no mania, no desperation, just quiet absorption. ETF inflows during red days, institutions increasing exposure while retail interest stays muted. Price holding ranges instead of exploding. To impatient traders, that looks like weakness. To long-term capital, it looks like construction. And construction phases always feel slow until the building is finished. When lending, payments, and stablecoin liquidity converge on a single settlement layer, something subtle but powerful happens. XRP becomes harder to replace, optionality disappears, switching costs rise. Once institutions integrate a system into their operational workflows, they don't casually rip it out because price dipped for a quarter or two. That's not how financial infrastructure works. This is also where the XRP is centralized argument quietly collapses under its own weight. Institutions don't adopt systems despite governance. They adopt them because governance exists. Validator voting, risk isolation, protocol level rules. These aren't weaknesses, they're prerequisites. They are the difference between experimentation and production. And production systems don't reprick incrementally, they reprick in steps. Think about how markets revalue anything once uncertainty is removed. A court ruling, a regulatory approval, a merger announcement, an IPO. Price doesn't politely drift higher over years. It gaps, it jumps, it resets to a new range, and then people argue afterward about whether it was obvious in hindsight. That's the phase XRP is approaching. The IPO discussion around Ripple matters not because it's exciting, but because it forces convergence. Private valuations, public disclosures, analyst models, all of it collapses speculation into numbers. And once numbers exist, capital doesn't argue emotionally. It arbitrages inefficiency. If XRP's utility volume and settlement role are mispriced relative to Ripple's valuation and payment flows, the market corrects that imbalance violently. This is why timing these moves is so difficult. The biggest repricings don't come when everyone agrees. They come when enough players independently reach the same conclusion and act without waiting for confirmation. That's when liquidity thins. Bids stack and price moves faster than narratives can catch up. Add macro liquidity back into the picture, and the setup becomes even more asymmetric. Stimulus doesn't care about narratives. Tax refunds don't analyze white papers. Liquidity sloshes into assets that can move and that appear undervalued relative to their perceived future role. That's why late cycle rotations feel chaotic. Capital isn't patient, it's opportunistic. And XRP sits in a strange but powerful position in that environment. It's liquid enough to absorb size, it's regulated enough to be permissible, it's boring enough to be ignored until it isn't. Historically, XRP's biggest moves have happened when conviction was lowest and attention was elsewhere, not during peak optimism, but during disbelief, when holders were exhausted, when commentators declared it dead money. Those conditions are quietly forming again, but this time with one critical difference. The fundamentals are orders of magnitude stronger. Back then, XRP was a promise. Now, it's a pipeline. Pipelines don't need hype, they just need flow. And once flow reaches a certain threshold, valuation follows whether anyone likes it or not. Markets can ignore reality for a while, but they can't ignore it forever, especially not when that reality shows up in balance sheets, settlement volumes, and audited disclosures. That's why this moment feels heavier than past cycles. It's not just about price potential, it's about role finalization. XRP is no longer auditioning, it's already been cast. The only open question is how long the market takes to fully internalize that shift. And here's the uncomfortable truth. By the time consensus forms, the opportunity phase is usually over. The easier symmetry disappears. Risk-reward compresses. What was once debated becomes assumed. That's when people say, I always knew, even if their action said otherwise. Tomorrow doesn't mean a green candle. It means a classification change from speculative asset to productive capital, from optional exposure to modeled allocation, from narrative to necessity. Once that line is crossed, there's no rewinding the tape. So enjoy the boredom while it lasts. Enjoy the sideways price action. Enjoy the doubt because those are the conditions that precede structural repricing, not the ones that follow it. And if you want to stay ahead of these shifts, understanding positioning, timing, and real capital strategies, instead of reacting after the move, the XRP Insiders Elite was built exactly for that. It focuses on preparation, not prediction and strategy, not noise. I appreciate you all. Hit that thumbs up. Make sure you're subscribed. Enjoy whatever wings you're craving tonight, and I'll see you on the next.